The first stock to keep on your tab will be Apollo Tyres, as the company's proposed acquisition worth $2.5 billion of the US-based Cooper Tyres is facing unexpected opposition in China, where 5,000 workers and the management of Cooper Tyres' Chinese partner, that is Changshan Group, is leading the opposition, fearing clash of culture with the management, with the Indian management, and also they are turning pretty nervous on the deal due to the leveraged nature of the buyout. Now there's a lot at stake here for Apollo Tyres, because this deal will give it footprint in 4 continents and have access to 14 manufacturing facilities. So that is why there is a spanner coming in the works over here, while the Apollo management continues to say that they do not see any impact of the current situation having on the impending deal. The next one is Unitech, where Unitech Corporate Parks, which is a listed entity under the group firm in London, is negotiating with the private equity firm Blackstone as well as sovereign wealth fund based in Singapore, which is GIC, to sell its IT SEZ in Gurgaon, as we've seen the case with many other realty developers. So Unitech Corporate Park in Gurgaon has about 3.6 million square feet of leasable area, and Unitech, the parent realty firm, holds about 40% stake, while Unitech Corporate Park holds a 60% stake in this project. Lastly, Federal Bank will be in focus, as the FII holding in this counter has reached 49%, which is the investment limit, and RBI has halted purchases by any overseas investors, as this limit has been exhausted as of now. Well, Sisagua, JP Associates and ONGC were the 3 stocks buzzing in trade. Sisagua surged more than 16% and snapped its 2-day slide. And we had other Vedanta Group companies such as Sterlite as well as Hindustan Zinc and Cairn India too, which were up and about in trade, very active and buoyant. This was largely reaction to the news reports which suggested that the government is looking to expedite the stake sale in Hindustan Zinc as well as Balco, and is looking to garner a sum of $3 to $3.5 billion. And remember that Vedanta had earlier offered to pay a sum of nearly $2.5 billion for the residual stake of the government in these companies. So therefore we had Sisagua being the top gainer on Nifty as well as the BSE Metal Index, accompanied by the highest volume action seen in the last 18 months. Next one was JP Associates, that spurted more than 5% in trade after hitting fresh 52-week lows. Now the counter has already slumped 66% since the start of the year and has seen significant market cap erosion, but now seems to be forming a floor near levels of 29 to 30, where it has consolidated since the start of this month. And it has now rebounded from the oversold territory backed by very heavy volumes, where more than 5.8 crore shares changed hands on the bourses. So this volume action was the highest seen in the last 2 weeks. Lastly, ONGC slipped 2%, stretching its slide for the 3rd straight day, largely reacting to the comments coming in from the global rating major Moody's, which has said that the credit quality for the oil marketing companies as well as the upstream oil companies is likely to weaken over the rest of the fiscal due to the sharp depreciation of the rupee as well as the elevated crude prices. And going by the adverse subsidy sharing formula that we've seen for the first quarter, that is from April to June, this is only likely to increase going forward in this fiscal. So that is seen as adverse and negative, and therefore this counters with the highest volume action seen in the last 1 week.